Well, Wall Street is bracing for President Trump's tariffs, including as much as 25% levies on Canadian and Mexican imports into the U.S. and slapping another 10% duty on China imports. CNBC's Courtney Reagan is looking at what tariffs could mean for retailers. But first, we start with Phil LeBeau and a look at the automakers. Phil.
And Melissa, when you look at the auto industry, it's really a regional industry, North America as a whole, as opposed to Canada, the U.S., and Mexico. But if you break down production by those three countries, in terms of vehicles sold in the United States, yes, the vast majority are built here in the U.S., but look, 16% come from Mexico, 7% come from Canada. So what are the automakers and, more importantly, the suppliers done to ensure that they can mitigate the impact of tariffs if they're put in place? One thing they're doing is they're adjusting production by either moving parts and components over the last month and a half into locations so that they can do manufacturing as much ahead of time. In some cases, it means bringing more vehicles, maybe from Mexico, into the United States so that you already have them here before tariffs go into effect. But look, if this goes beyond 2 or 3 weeks, as you take a look at shares of GM, Ford, and Stellantis, the real question is how much of this will be passed along to consumers? Now, S&P Global Mobility says the impact, if you were to add up the numbers, comes to about $6,250 per vehicle. Let's be clear. The automakers are not going to jack up their prices by $6,200. They're going to try to see how they can mitigate this as much as possible, maybe with suppliers having to eat some of the costs, maybe with consumers having to eat some of the costs. But we really won't know for at least 3 or 4 weeks, because that's when the automakers will have to make a decision in terms of pricing. It could be sooner, but most believe it's going to be at least a couple of weeks down the road. That's the story with the auto industry and the potential impact of tariffs. Now let's talk about what's happening with retailers. Courtney, you've got that story.
Thank you very much, Phil. Appreciate that. So the fluidity of the tariff talks has retailers sort of workshopping multiple game plans. One source I spoke to, who imports beans from Mexico, for example, for grocers, including Whole Foods, is preparing 9 different scenarios, including possibly shifting production to the U.S. Now, most major retailers have been diversifying away from China for years, some, including Newell Brands, nearshored to Mexico. Tariffs on Mexico likely to be painful for Ethan Allen, which makes its upholstery items there. 30% of Boot Barn products, those are made in China, 25% in Mexico. And while 80% of Whirlpool's U.S. sold goods are made here in the U.S., the other 20% made in China and Mexico. Best Buy's top countries of import, also China and Mexico. Contour Brands, that has 25% of its production in Mexico and puts the unmitigated impact at $50 million this year, but says it can offset the cost within 12 to 18 months. Now, the impact of retaliatory tariffs, that's even harder to discern if we get those. So in 10Ks, Columbia, Hasbro, Carter's, they say retaliatory tariffs would damage their ability to compete internationally. That's kind of all they've given us so far. Now, one source I spoke to who works in Canadian retail thinks if Canada applies retaliatory tariffs, the impact really would be devastating for its economy, its consumers' ability to spend.
Canada's.
Yeah. They were talking about, this person that I spoke to said that, I wasn't aware of this, that, for instance, dairy is already highly tariffed in Canada. So a block of cheese that might cost us $4 here costs $20 in Canada already. And it's done to protect the dairy industry. So there are some sort of categories like that. And they worry about that. They said, look, I think people that live close to the border may very well drive into America to buy some of their goods if indeed there are these retaliatory tariffs. And yeah, it's just going to be a very complicated picture. And most people think more damaging for the consumers in the economies of China and Canada than to us if we're looking at tariffs on both ways.
Yeah, that's what this administration is counting on, probably.
Yeah. Phil, how long till the automakers actually decide that they've, mitigating is eating costs, right? And so how long can they do that for?
Most believe you get to a 3 or 4 week period, let's say the end of March, and these have been in place for 3 or 4 weeks, and it doesn't look like they're going to go away. That's when the decisions will have to be made. Wow. And look, everybody's going to be tracking the pricing right off the bat. And I think that maybe the end of March is when you really would start to see some type of an impact in terms of, let's say, a pickup truck that is built in Mexico. How much does that change? And how much can the automakers spread that out across the entire portfolio? It's unlikely that they're going to take a specific model built in, let's say, the RAV4 built in Canada and immediately say, okay, here's the price because of these tariffs. They'll try to smooth that out across the entire lineup.
There's also this notion, Courtney, that for goods already made in the U.S., they could actually raise their prices even if they don't feel any impact from tariffs, as long as it's lower than the tariffed goods as an option.
Yes,
they can still win market share.
Absolutely.
So consumers can feel price increases across the board, even made in the U.S. products.
I think that we saw that to some degree back in 2018 when we were talking about the washers and the dryers. So like the washer prices went up, but the dryer prices kind of did too, because they're kind of a pair, right? So you can pick up that margin on that side. And I think that definitely is potentially a worry. And I love your point about mitigating things as just sort of eating the cost. Somebody eats the cost maybe somewhere in the system. So then profit margins go down, then maybe investors pay. And to Phil's point about timing, if you've been into a store recently, I mean, it's freezing here in the Northeast. There's no gloves in sight. I mean, they've got their swimsuits out already. And so there is a decent amount of inventory that's already here just by the nature of how retail works. So we may not see the price increases actually come into play maybe late summer, depending on, again, how much the retailers wanted to eat the cost of storing goods in advance, potentially, for this to have happened. But I thought it was interesting. Everyone I talked to said, we've got to game plan all these different scenarios. We've got to present them all to the board, and then we have to decide, like, which one are we going to take and how fast can we move, because these things are changing so rapidly.